Good afternoon, everyone, and welcome to the Monday Open, hosted by Vantage Australia's private client group. We've got a bit of a change up in the lineup today. So my name's Ollie, and I'm joined by Tony Fay. Tony, why don't you introduce yourself?
Hello, Ollie. Thank you. Hello, everyone. My name's Tony Fay. I'm the relationship manager in the private group and had a few years of trading experience and also previously over 5.5 years experience as a financial advisor, providing investment advice and etc. So great to be in the team. Thank you.
Fantastic. All right, and thank you for joining us. So for anyone who's familiar with the channel, you'd be pretty on top of the structure by now. But just to go over it with everyone, typically we start off with a summary of last week and an overview of any upcoming major events for the week ahead. We then switch over to the technical corner where we go over a couple different markets and identify potential opportunities through a technical top-down analysis. Then we shoot over to a Q&A where we answer some of the most common questions that we get asked by our clients. So without further ado, let's jump into it. Tony, would you like to take it away with next week? Or with last week, sorry?
Sure. Let's start with the last week, which has a lot of events coming up in there. So let's start with Canadian federal elections. Now, Prime Minister Mark Carney's Liberal Party secured a fourth consecutive terms, forming a minority government. Given Mark's stance on Donald Trump, trading negotiation between Canada and US might create short-term market volatility, particularly in a sector sensitive to US tariff, such as automotive sector, agriculture and dairy, energy and forestry, which in turn then leads to upward pressure on defensive assets such as gold price. Now, back home, Aussie CPI year on year come up with 2.4%, slightly higher than the forecast 2.3, but it's on par with the previous period. As a result, markets are pricing in a 95% chance of 25 basis point rate cut in May, while AMP and Commonwealth Bank anticipate up to 3 rate cuts in 2025. Now, what does this mean in terms of investment? Well, cutting rate can stimulate production within Australia by shifting demand towards local goods and services, as well as a reduction demand in Australian dollars, which then could potentially lead into a fall in price regarding Australian dollar related forex exchange, such as AUD USD exchange rate. Now, Bank of Japan, on the other hand, decided to hold rates on 0.5% as expected. Highlight from the Governor Yuda conference, including uncertainty from the trade policies heightened sharply. Bank of Japan also expect to keep raising rates if economy prices move in line with projections. Now, let's put this into perspective. Now, if RBA and the Fed cut interest rate while we already know the Bank of Japan holding the rates, hypothetically speaking, AUD JPY and USD JPY could be facing a downward trend, while future potential for BOJ to hike the rate further could put pressure on Japan's export economy, which then in turn could cause downward pressure on Japanese equity market. So Nikkei 225 is definitely something that we need to watch out. Now, let's turn to US. A very big impact in here. The US unemployment rate comes up 4.2%, on par with expectations and previous March figures. We're also seeing non-farm payroll adding 177,000 jobs, exceeded the expectation of 130K, however, well below previous period of 185,000. So what does this really translate into the investment? Again, collectively, a better job results together with Trump's backtrack in his tariff and potential progression on trade talks negotiations has pushed up the investment sentiment, resulting all 3 major US indexes 9-day rally, while we have seen gold, on the other hand, fallen from its selling of 3,500 and broke through a few significant support levels along the way, hovering just around 3,240 by the end of the week. Now, turning back home again, Australia federal election, Australian Labor Party, led by Prime Minister Anthony Albanese, secured a clear majority. This news really didn't put too much impact on the market because this is well anticipated within the expectations. However, we shall have a closer eye on what comes next from the Labor because it could have impact on our debt structure and physical stability. So that's pretty much wrap up what happens last week. Now let's turn into this week. A few things to watch out. First of all, 3 out of the big 4 banks released their half-yearly results. We got Westpac on Monday, NAB on Wednesday, and ANZ on Thursday. So pretty big news here. So Ollie, what are you expecting from this stuff?
Well, I read an article by Kerry Sun on Market Index this morning. It's they're kind of forecasting a bit of a mixed bag in terms of the results here. You know, for any people who are trading individually on shares, there's definitely some opportunities coming out here. So they're quoting a year-on-year growth of 2.8% for Westpac. You know, it's pretty good, above expectation for its competitors. Comparative, 0.2% year-on-year for ANZ. Those are definitely some good opportunities in terms of the share market individually, but other side of that, the NAB is expecting a decline in terms of earnings. So how that will impact on the ASX overall, I'd expect to see some positive sentiment from it. But obviously, given that it is a bit of a mixed bag, there could be some volatility throughout.
I concur, absolutely. But it's definitely something that investors should be watching out. Now, moving forward, on Wednesday, another big deal here. U.S. federal rate decision will be announced. The market is expecting to hold at 4.5%. Now, if indeed this is actually the case, then a dovish movement could send a message to the market to have some impact in the economy. For example, lower borrowing costs might boost corporate profits, cheaper credit can stimulate business investments and consumer spending, as well as potentially if the actual U.S. Fed indeed moving further in the actual rest of the year to decide to cut the rate, this could also in turn have a discount cash flow for future earnings become more valuable. As a result, this could send a message for the U.S. stock and indexes as well to be bullish moving forward. But in the meantime, that because the interpretation could turn this upside down, where the sentiment on the potential recessions and all that leading to the federal to cut the rate, we could also be seeing a possible bullish movement through gold as well. So again, this is something that definitely investor wants to watch out and see how it turns out to be. Now, we also have a Thursday event, which Bank of England will again declare the rate decision. The market again is expected to drop 25 points to 4.25. If the Bank of England indeed drop the rate, this could have impact on the strength of British pound for sure. And we could see a downward trending in the related forex pricing. I believe Ollie will have a bit more to say from the technical point side on what happens to the British pound in such event in that. I will leave to you a bit later on. But last but not least, on Saturday, China will release a CPI. We know the previous year-on-year was minus 0.1%. Now, the analysts anticipate that April CPI could reflect a continued weak consumer price growth, potentially showing another slight decline or minimum increase, if that's the case. Now, what does that really mean? The further reduction of CPI could be a deflationary signal. We believe that's typical negative to the corporate profits and the market confidence. Now, what does that mean for the global market if this indeed to happen? On one hand, we'll be looking at commodities. Lower Chinese inflation could reduce demand expectations for commodities such as oil, copper, and for us Aussies, iron ore. Now, that will put the downward pressure on prices of commodities. Now, for emerging markets, a soft Chinese economy often waiting on the actual stocks, particularly those relying on the China's import demand. That's something worth looking at. For U.S. and developed markets, we believe there could be a slightly benefit from the lower global inflation pressure, though, prolonged Chinese deflation is always a risk factor to the global growth. As a result, the Chinese equity, we believe it's a slightly bullish, but generally speaking, a bit mixed outlook if that's to be released. For commodities, we'll be looking at potentially bearish. Global equity, on the other hand, cautiously bearish or neutral. Bond market could be actually, due to the lower inflation, lower yields, we could be looking a bit bullish. And US dollars may strengthen if China's outlook worsen. That's for what this week that we'll be looking into.
Thank you, Tony. All right, so I guess we'll shift on here, go into the technical corner. Alrighty. So the first market I wanted to look at today in terms of the technicals was on the pound Aussie. Right now, I'm looking at the one-day chart on the pound Aussie. So looking on this chart, we can see a pretty strong upward trend. This is dating back till pretty much halfway through 2022. Looks like just after July there, where we really started to see this upward trend. So the support level on the lower level of the trend is getting higher and higher. That's kind of simultaneously alongside the resistance level on top. As for where we are right now in the price, we're kind of sitting about halfway in the middle of this range here. So I'm expecting it to be pushing a bit further down here, maybe to test this lower support level again. This also kind of ties into what Tony was saying before about, rate cuts obviously would likely weaken the pound. So this would push it further down towards this lower area just here. But then if we go into the 4-hour chart here with our Bollinger Bands, so this is again on the pound Aussie dollar 4-hour chart here, we can see right now, as of pretty much last week, the prices are hitting the lower level of the lower band on the Bollinger Bands, which is kind of signaling that it is likely to maintain down on that trend. We can also see this along here. It's been a bit of a mixed bag either side of the moving average, but for the most part, the last tail end of last week, pretty much since Wednesday going into Thursday last week, it is all in favor of a downward pressure, which I would expect to carry on through into the rest of the week. So the next market that I've been wanting to look into is the US dollar Canadian. So again, looking on the daily chart for the US dollar Canadian, we can see there is a pretty strong upward trend going here. So the lower support levels have been increasing again, as well. The higher resistance level has been increasing as well. So we can see towards the start of this year, around when the time when the tariff news started to come in, it did did weaken the US dollar or strengthen the Canadian dollar up towards the top level here, but it has since been a pretty steep decline on the way down. So given the context of the fundamental side as well as the technical, I'm expecting this price here to be testing this lower support level, if not breaking through it. So if I was looking to go into a trade, I'd be probably looking to set about a limit about here at 1.34, probably put a stop at the 1.4 level. But if we look at it into even a smaller sort of time frame, so pretty much from the tail end of 2022 until now, it has been pretty range bound, say from along here upwards between the 1.8 level to the 1.38 level to 1.32. So I'm expecting the price to bounce back into this range and probably keep testing the lower line here, or I guess the support level for where it is testing now. If we switch this over to our chart, I'd say it also points into a bit of a downward trend here. So we can see a bit of a steep downtrend here. It's testing the lower band, as well as the lower and the upper bands have been converging, which does signal potential for a breakout. However, I'm expecting it to be a breakout on the lowest sort of end. You can see the prices have kind of touched the lower bands a few times recently. It's kind of like in the top level, but not really too much on terms of breaking it, which I would expect to shift into a downward trend here. All right, so I think that covers most of the technical areas for what we've got here. So I guess now we'll shift into the Q&A section. So for anyone who's looked or who's seen these videos before, looking onto these ones, I know for the question and answer, we like to basically take out a few questions that our clients typically like to ask us, put a bit of color on them, and so give a bit of context in for everyone who's watching. So Tony, would you like to take it away with question one?
Thank you very much. All right, so the first question is regarding gold. What are the things I need to look out for when investing in gold, given the actually amazing run for the gold this year? So that's quite actually often the question I've been asked. So look, here's the thing. Gold is very sensitive to macroeconomy events. Hence, there are a few things we do need to watch out. The first thing is the interest rate, especially US Federal Reserve rates. Generally speaking, the lower interest rate makes the gold become more attractive, and therefore the gold prices rise. But also there are other things to watch out, such as recession risk and economic downturns. Now, in recession, central banks may cut the rate, which meantime, fear for the economic collapse drives the demand for stable assets such as gold. Now, in saying that, the other thing that the investors should really be pay attention to is US dollar strength, specifically USD index. Now, this is because the gold is priced in USD globally, which means a stronger USD means the gold becomes more expensive for the non-USD buyers. That basically means the gold prices fall versus versa. The other thing that's also actually that need to be looked into the financial market volatility, such as stock market crashes and all that. The rationale is very simple. Investors shift gold during the stock market downturn for safe storage of the value. Now, generally speaking, high volatility means high gold price. One particular things that investor could be looking at in compare with the actually, the volatility movement is VIX, VIX. Usually, when the VIX goes above 30, it is considered that the market be volatile, meaning that the investors are in a panic mode. Whereas the VIX under 20 simply means the market is relatively stable, where the sentiment is pretty content. Now, last thing that we're also looking into is inflation and inflation expectations. Now, this is because the gold is generally seen as a hedge assets against inflation. Therefore, rising inflation will push the gold prices up and versus versa. So these are a few things I believe that actually can help the investors to engage where could potentially be the sentiment on the gold and the prices as well. Now, I think we also have another question, Ollie. I better hand over to you then.
Awesome. So question 2, what is a range-bound market? A range-bound market is a market which on trend moves within a defined range. So essentially the market price moves between these prices where support and resistance are strong. So in turn, it gives traders an indication of price movements. Traders are looking for the price swings and will buy near the support, sell near the resistance. As for why this is important to identify a range-bound market, it will help you to identify key trends and modify your risk strategy accordingly. How you engage with a trending market versus a range-bound market will be different, so being able to identify them correctly will make a difference. All right, well, that brings us to the end of the video today. So this video will be uploaded to our VIP trading room later this afternoon, as well as published to our YouTube channel. If you haven't visited our VIP trading room, please do. We post a lot of information and resources in there every day. Tony and I are both in there pretty much every day, along with a lot of analysts from Everest Fortune Group. We have a weekly technical video posted in there each week, as well as updates on any major market-moving major events. As well, if you are a trader who likes fundamental analysis, please do subscribe to our private client daily update. This is emailed out every morning as well as posted in our VIP chat room. So that's all from me now. Catch you later, Tony.
Thank you very much for having me. See you, everyone.
Cheers.
Happy trading.